Well, Yellen came out with her speech. The markets first reacted negatively to her posturing about how the labor market is showing solid performance and their outlook for economic activity and inflation are in line, et cetera, et cetera. And then, lo and behold, the market turns back around and rallies furiously to the upside. Essentially, I think this is the market expressing that, first of all, her speech didn't really contain any nasty surprises. And it's just more of the same jawboning that the Fed's got to do. You know, they've got to maintain this posture about being vigilant about raising rates, but they know that their hands are tied with respect to the global economy, which is showing very little signs of life. It's, you know, quite recessionary, prolonged, in a prolonged manner. And Yellen did then, of course, say in her speech that any decision on rates, quote, always depends on the degree to which incoming data continues to confirm the Fed Policy Committee's outlook, unquote. So basically saying, you know, she's wishy-washy. She's going to flim-flam between, you know, okay, we're going to take a hard line here because things are looking good, but at the same time, we may not be able to do anything because things may not look so good. And as far as these numbers, I think the Fed is very aware how they are manipulated and massaged. I mean, yeah, it is true that the labor market has seen continued solid performance the last few months. Job gains, I guess, yeah, they say have averaged 190,000 over the last 3 months, which is certainly an improvement if you look back over the last year. But it begs the question about the reliability of, you know, how do they get these numbers? I mean, we know, for instance, that the CPI has been grossly distorted over time by removing those components showing inflationary tendencies. And so this, of course, by having a low CPI, gives an artificial boost to the GDP. We also know that the unemployment rate fails to count those who have given up looking for work. We also know that non-farm payrolls, that number includes many temp-style jobs. Many major companies across the planet have cut back substantially on full-time hires, as that's been a growing trend.
Dr. K?
Yeah.
I would also mention on the GDP number, you have to remember that the government overstates GDP mainly because it understates inflation. So the GDP number is adjusted for inflation, but when you're understating inflation by a good, what do they say it is now, 1.2% annually on inflation?
Something like that.
Yeah,
something like that, yeah.
So they're, meanwhile, you've got guys like John Williams over at Shadow Stats and some other people saying it's somewhere between, say, 5 and 8%. So they're understating inflation by, you know, 4 to 7%. So what does that mean? Where, you know, where is GDP really if you use a realistic adjustment for inflation? Anyways, I just throw that in, but I think that's also a, you know, points to what you're talking about in that it's all phonied up. So we're living in a world of phoniness, and, you know, it's not surprising that candidates like Hillary Clinton and Donald Trump arise in this sort of world. But it's all phonied up, and you're just running on this QE liquidity, it seems like. Anyways, carry on.
Yeah, you know, it's a good point. You know, we know that politicians lie. They've tracked how many lies, you know, Hillary says or Trump says, and if they're lying on their campaign stump, of course they're going to lie when they're in office. That's just the nature of things. Governments have always lied, though. This is nothing new here. You know, this whole weapons of mass destruction, that's been pretty much conclusively blown out of the water. You know, there's so much evidence now. I mean, it's interesting. If someone does their due diligence, they can actually uncover some declassified documents, say around the 1960s with the Cuban Missile Crisis, and you can actually read for yourself these documents on how the U.S. was basically creating, trying to make Cuba as the fall guy and trying to make them appear far more aggressive and dangerous than they were. Anyway, I don't want to get off the topic of the economy, but I guess it just doesn't. It just shouldn't come as a surprise, you know, that these things are quite manipulated. And I was just saying that you know, with the number of temp jobs, I mean, people have noticed, and I've some friends in Hong Kong, but you can find, again, you can find this on Google, that many of the high rises in China, I mean, these high rises have gone up, you know, been building rapid fire in various cities in China. And these are, you know, some of these skyscrapers are easily, you know, 40, 50, 60 stories high. And these are designed for businesses, and many of them are dark. Many of them have huge numbers of vacancies simply because companies are no longer hiring permanent full-time workers. You know, when a company doubts that the economy is really improving, it's going to add temp workers because there's no long-term commitment. They're cheaper, essentially, and management can cut them at will. So, you know, a temp worker can be a great fit in these times. You know, they can always be added on permanently should things improve. But right now, the trend has been fiercely in the direction of companies hiring temps. And these are counted in the unemployment, or rather the non-farm payrolls numbers. So everything's a little bit rickety here. And you know, ultimately Yellen suggesting about the solid performance of the labor market and so on. She did spend a lot of her speech discussing the need to add new tools to the Fed's toolkit to combat the next recession. I mean, if she really were happy with the numbers and the way things are progressing, then she wouldn't spend so much time discussing, you know, what are we going to do next? You know, the interest rates are so low that further reductions may have a limited impact. You know, she is obviously concerned that they don't have to go, that they wouldn't have to switch to negative rates, and is hoping for an alternative solution. And you know, she said, this was a quote, that Fed officials may wish to explore the possibility of purchasing a broader range of assets. So I think they're really grasping at straws here. She didn't mention negative rates in her speech this time, but she is on record twice, once in 2010 and once more recently, saying that negative rates are always an option. So what happens? So gold rises, the markets rise. In fact, we were talking about gold and silver when they get ugly in the pattern, and also try to train your eye to look for low volume clues in these patterns, because they are a bit sloppy. But when gold, say GLD, starts to get quiet and it's down a bit, like you could see this back in June, basically in very early June, when gold was off, GLD was off about 7%, then it starts to get a little bit more quiet in there, and it's a tricky pattern, but you can definitely use it to your advantage. It's certainly a more unorthodox way of looking at charts, but then you know, pocket pivots, especially back then, were a very unorthodox way to look at another way of making money in the market back in 2005. So at any rate, yeah, we're looking at commodities, gold, oil, etc. If you look at the Commodity Research Bureau index, it looks like that's stabilized and might be now attempting to start moving higher. We know that that hard assets tend to do well in environments like this. So ultimately, I think that the trend in commodities and real estate and stocks is still intact. And when I say trend in stocks, I mean basically this kind of loose trend we've seen since 2009, since QE began, and that of course makes the U.S. the tallest standing midget. The risk-on behavior of, say, the Russell 2000, which is a small cap index, that it's performed the best since the Brexit lows, and then we also have had a number of IPOs do very well. I think that's a feather in the cap of the risk-on attitude, that the capital has to flow somewhere, and it's going to flow into where it's going to get the best return, and that is going to be U.S. stocks so far. So at any rate, you got to keep your stops tight nevertheless, because you know, the market hasn't really had more than 2 days of setback since the Brexit lows, which is pretty unusual, because if you look at prior, like 2015, which was a very sideways market, you had a lot of short, sharp shocks, downward shocks to the market, where averages would fall anywhere between 3 to 5%. And that happened frequently. And if your average is going to fall that much, you can better believe that your stocks, we're trying to look at the stocks with the greatest time value on a risk-reward basis. So the ones that are the high-flying ones, we've reported on a number of these, such as the Chinese names. Some IPOs have done this. They'll give you 10% or more, sometimes 20% or more in just a few days. You got to be quick about taking your profits because especially in that kind of environment, if the market actually does take a dive, well, not a dive, but let's say a correction, a pullback. It's not really even a correction, but a pullback of 3 to 5%. You don't want to be in those types of stocks because odds are likely they are going to they're going to reverse their gains. We've seen this in LN. We've seen this in ACIA, TWLO, and the beauty, though, of this kind of market environment is that when you start to see these type of high-quality names get quiet, looking for those low-volume days, volume dry-ups are worthy patterns, then the odds are increasing in your favor on a risk-reward basis to get back into the position. And there's also the undercut pattern. The undercut where a pattern where a stock sells off sharply over a day or two and then rebounds with ferocity, which is sort of it's basically a reversion to the mean technique. And the VIX volatility model utilizes that tactic in certain cases, in certain market contexts, to its advantage. But you can do the same thing with stocks, certain stocks, of course. And again, you have to train your chart eye to be aware of these patterns. But again, this is nothing new. We've been talking about these types of setups for quite some time now. And of course, with pocket pivots, the ideal pocket pivot is the one coming back up through the moving average, or it got real quiet in there and then it showed a sign of strength, but it's not extended relative to the pattern. So those can be bought. And then you've got your extended ones, but they can be bought on constructive pullbacks. So you're armed. I think people are armed with some pretty good tools to handle this kind of market environment. At any rate, I will go ahead and turn it over to Gil at this point.
I think for the most part, making money in the market has not been all that easy unless you've been playing these hot stocks that are rocketing to the upside, the Twilios and the Acacias, and to some extent the line, yeah, that's right. I keep wanting to call it Lane Corp. I don't know why, but the line has been, was best bought on the undercut and rally, and then here's a nice little gap up type move, and then it pulls in, and now you have a trend line breakout. It pulls all the way into the lows here, or the top of this pattern, and then it turns, it goes higher. So your entry points really are on the pullbacks. Here, if you had tried to come in at the 10-day line, it didn't hold, and if I'm buying a stock at the 10-day line and it doesn't hold the line, I'm pretty much gone right away. I don't give them much room. I'm willing to come back to it right away if it doesn't completely blow up. But in this case, this thing had a huge run off the lows, and it pulls back in. And now it's sputtering around here. You can see it's stalling a little bit today. So nothing really conclusive right now, but it has come down to the bottom. So I bought some of this yesterday, and it's up a little bit, but I'll actually sell into that move and look and see if it holds the 20-day line, which is what it's doing so far. You can see it just holding above the 20-day line as we speak. So, but it's coming in now about $1 off its highs. And Twilio, here's another one. This was undercutting yesterday, and it just barely undercut. Tried to move higher today, but kind of came back down, testing the 20-day line. This might be in a lower risk buy position here, using the 20-day line or the lows of the day at 49.61 as your stop. But we'll see what happens here. I think for the most part, Yellen started out, apparently the market, it looked to me like, at least from the comments I was listening to on the TV, that initially she was sounded somewhat hawkish. And you saw the market sell off right away, and you saw gold and silver get hit, and all the mining stocks rather all got tagged together. I'm in the wrong chart here, but I was long this one. I actually sold it into the opening, and it was up near 14 around the open, and then it came back in all the way down to 13. And what you're seeing here is one of these extreme low sort of pullbacks, and this is what Dr. K is talking about in the gold and silver. When they get really ugly, that's the time to be buying them. But it seems to me that it's less of a technical trade than it is an event-driven one. So if the Fed's going to remain on hold in terms of raising rates anytime soon, then you're going to see the metals rallying, which is what they're doing now. But they've been selling off for the last several days, and they've been coming down pretty hard. Silver is all the way back down, almost on top of this structure, not too far away actually. But it's violated the 50-day line, and for the most part, you think it's fourth down here, so you got to be punting. But that might not be the right thing to do. But that's obviously what everybody's thinking once it breaks the 50-day line. But then that brings it into a position potentially to be bought if you want to buy these things. So I generally myself will buy the physical items when they pull back severely. And I just bought some silver the other day on the pullback here to add to my holdings, but nothing really significant. But that's what I'll do. I'll just nibble along on the pullbacks, but I'm buying it mostly as a hedge against continued devaluation of the dollar and the fact that you have central banks printing money all over the place. So you can see that the GLD comes along the lows of this consolidation it's been in since late June, and that's really all that's going on here. If you look at the weekly chart, same thing. So it's really in a base. It's not breaking down. It's not completely coming apart. Silver, it tends to be more volatile. So you have gold being a little bit more steady among the two, and it's trying to post. It might. Let's see. Its volume's running pretty good right now, right, Dr. K? It might post a pocket pivot. Let's see what.
Yeah, its volume's at 162%, so it's looking like it very well may.
Yeah, let me see what my projections are on.
It needs to trade 12 point. Well, it needs to trade 15.4 million. So
Yeah. See, okay, you guys can see here. I don't know if you guys can see this. I'm going to try and make this bigger. But you can see this. This is projecting the volume. Where's my pen here? It's projecting the volume to be way up here. So that's you can see that green. It's almost the same color as my pen, but you can see that it's sort of projecting that, or it is projecting that we're going to have huge volume in the GLD here, but it's stalling a little bit around the moving averages, the 50, the 10, and the 20 days. So from a technical perspective, you notice it finds support at the 65-day exponential, which is this black one. I use that on some of my charts. I've noticed that that can often be a place where a stock will hold when it looks like it's violating the 50-day moving average. So
yeah, the thing about the projections also is that my guess is that I mean, I have my own way of projecting these things, but it seems like it's more mechanical approach that they're using because
well, it's assuming based on the current rate that it will continue at that rate. So that's where you
right, but
on that.
But contextually, that would be nonsense because obviously there was a spike because of Yellen's speech, but now you can see on GLD on the 5-minute chart that the volume is now normalizing itself.
Right.
So I don't think that it may not reach 15 million shares today on that basis.
No, it's not likely to do so at all, but it does give you some advance warning. When I'm flipping through charts very quickly, I find it useful from a visual perspective that
oh yeah, no, it's got its place
so,
for sure.
Anyways, let's look at some questions real quick. Somebody's pointing out that wasn't the main topic of our talk the toolkit at the Fed's disposal more of an academic speech and near-term strategy. That's what it sounded like, I think, when you read the whole thing. Yeah, so it's not, it's sort of a non-event. So we kind of figured this yesterday, and so on that basis, we were thinking you could buy some of these stocks, and you would have gotten some decent trades out of them so far today, coming up off yesterday's lows. Line is one of those. Twilio had a nice move at the beginning. Somebody's asking about that. But you can see that on the 620 chart, there's a couple things to look at. First of all, you get this MACD stretch down here at the lows. You see that? So that obviously gives you a bounce. So if you're looking to jump into this thing, that might have been the spot. It dipped just below the 20-day, which is kind of classic. And now you've bounced. Now, what I would be watching for is a retest and see whether you see volume drawing up on an intraday basis. So I don't think, where the market's at, it hasn't had a big sell-off. The last couple of days haven't seen a huge amount of volume. So it makes sense to me that it's not going to, it wasn't getting out of hand. So it was more in anticipation of something nasty coming from Janet Yellen, and that was basically a non-event. But on the other hand, I think if you use half of your brain, you could kind of figure that one out. It wasn't rocket science in my view. So, this is what I'm watching here right now, and hopefully this webinar won't keep me from seeing that when it happens. So, one of the things I don't like is being distracted during the trading day, and this is one thing that can be a distraction in terms of keeping me from seeing what's happening. So we're going to try and keep an eye on things. But you can see you're kind of seeing a decline in volume here, and it's pulling, kind of sliding back in here. It might be a weak number on what was it, what's that hot little goodie, tail end or whatever, what is that thing?
Which one? You're
TLND.
talking about, yeah, TLND.
That's it. Now that these guys came out with earnings, they got smoked, and they gapped down huge. And I saw this morning, and I saw it's undercutting this low here. Can you see that? It's just barely undercutting this price line. I'm thinking maybe I should buy some of this thing here. It's so thin though. It trades on average, what? Well, I think I'm showing like a couple 100,000, so it's pretty minimal. But that would have been good for a trade. So you sort of have to be on the lookout for these on the earnings. They gap down. I definitely, if I bought this pocket pivot in here, I wouldn't have held it into earnings. I would have been out of this thing. But if you're sitting there and you're watching the gap down in the morning, that could be a buy spot. And I think it was actually in hindsight, at least for a day trade. And you can see how you rapidly get down on a MACD stretch, and that's pretty much the low here. So I don't know what just happened here, but I'm going to have to bring this back. Here we go. I want this a little bit bigger. So now it's trundling higher, but see now it might roll over, and that's a possibility too. So I'm watching like the Twilio. This actually looks kind of interesting here because you're seeing the volume drawing up. Now if I see it pick up, I'm actually going to buy a little bit right here. So there we go, just a tiny bit, and see what happens here. I'm not averse to trying these things out, but I'm quick to run if they don't hold. So now your 20-day moving average is at 50.23, so you're all of 30 cents lower from here on the bid, or on the offer rather. So it's kind of in a position. So either you're going to take a position or you're not, one way or the other. Let's see. Ulta is a case in point for a sudden pullback. Well, that looks like a big break off the peak. This thing's had a long run, so I mean, if I had owned this thing, I wouldn't hold it into earnings. I know it seems to gap up after earnings every time, but we finally broke that pattern. So that's, I don't know, would you call that a sudden pullback, Dr. K, or just an outright blow up?
No, I wouldn't. This is a perfect example of get out of the way. Don't ask questions. Take your profits. Look where it opened. You could have, obviously the volume was very pronounced on this thing. So just dump it.
Lose that puppy. Anyways, let's see. Someone wants to review the 620 chart on ACIA. Well, I don't really know what there is to review. The stock, what you have to look at here is that it came right to the $100 level. And what do we know about the $100 level? Well, that's the Livermore's century mark rule level. So in my view, the 100 level becomes support level. So if you're going to buy the stock and nibble on it, and we talked about this yesterday, look at some of these stocks coming in that we have likely, and they're coming into areas of potential support. The $100 level is an area of potential support for Acacia. So that's where you would be nibbling on it. I don't see anything necessarily that would tell you to buy this unless you're using this 620 buy signal right away at the open. But I think you could have just nibbled on it right along the 100 level and just played it that way. So anyways, I think that indexes are likely to flop around. It's really a matter of where some of these stocks go. So and that's neither here nor there, I guess. Right now we're kind of chopping around, and like I said earlier, most of the big moves have occurred in a small group of stocks. So it's been relatively narrow. You see the Russell 2000 has been doing well, but so has the NASDAQ 100, the NDX, which has been running higher. But lately the Russell is taking over, so you're getting this sort of risk-on sort of thing. But the bigger names have been a little bit on the slow side. AIRG, what is that? Is this a new IPO? Airgain? Yeah, that's interesting. Don't really see a buy point. I guess if it pulled to the 10-day, which is now at 975, might be interesting to step into. Let's see. You know, the one thing about a lot of these stocks, like these hot IPOs, is that if you come in late, and it's really interesting, I call this, and I've talked about this before, what I call the Cinderella Principle, which, you know, it's the old thing about Cinderella only comes to the ball once. That actually, in my mind, comes from when I used to play Little League Baseball, and one team I was on, one game, we had gone through our whole lineup. So in Little League, people can only play so many innings a week, so we only had a few people who could play. At this point, it was like an extra inning game, and we went through all our players, and we needed a pinch hitter because somebody got hurt. And the last guy on the bench was this really lame player, this kid who was just not really very good, but they put him up to bat, and he hit a home run. And so the next time we had a game where it was really tight, and it was a normal game, we had the availability of all our players. The head coach goes and puts this kid in again to hit, thinking that, you know, of course he's going to hit a home run again. And the assistant coach says to him, I overheard him say to him, now, Cinderella only comes once, you know. And I clung on to that principle, and of course the kid struck out on 3 straight pitches at that point. So Cinderella only comes once, and if you think that once you see this kind of a move, you know, everybody wants to buy it, and they're looking, once it's done this, they want to buy any little pullback, and the key is to just lay back. You know, lay back and wait to see what shakes out. You know, if you miss the run, if you got in down here, which is when we first talked about it, right along the 10-day line, you got a huge run, and it was about 58% from the 10-day line here. And if you don't see that as a massive move to sell into, then you probably shouldn't be in this market, because if you're thinking it's a high tide flag, you know, everybody wants to put labels on everything. It's a high tide flag, which means it's going to go to the moon and just jump on anywhere. It doesn't really work that way. But I do think you have a better shot at making money here if you buy it at the 20-day on the pullback. You're undercutting this low and trying to come up the other way. So this looks more constructive. So, I mean, you could make the argument that with the central banks printing money across the board and ready to continue doing so, the only real asset class left to buy, gold and silver, commodities, and stocks. Right? Anybody got anything else we could buy? Anyways, so let's look at Line Corp. So Line comes down to the top of the trend line breakout. You guys can all see this, I hope. And I got to tell you, I'm focused on a very few stocks and just trading them. So you come all the way down. If you draw the line across the peaks, notice how it almost perfectly hits it. That line is reasonably straight. And so it bounces off. But my guess is it's going to retest. And so I sell into this move here. If I bought yesterday down here, I sell into this. Now I'm looking to see what it does. Now, of course, the Cinderella, people who want Cinderella to come back right away are going to sit around and jump on it and stay in it, looking for it to, it's going to just truck right back to new highs, right? That's what they all do. I think it's going to back and fill a little bit. I think it needs to. So I'm not going to get overly excited yet because it's really not, it hasn't held support. It's come back to the top of this IPO U-turn, and it's a little funky, so I think it needs to settle down. We'll see. If it comes back into the 20-day line today on the 620, and I'm picking up some good action, let's take a look at this on the 620. Whoops. Where are you, 620? So it's acting pretty good. Notice how it tests the 20-period line here, and then it bounces back to the upside. So it might come in and test it again, or it might just roll over. So I don't know. I watch this market. I'm a little wary of things, and I will actually have some shorts at the same time that I have long. So I notice. Let's look at an example of something. Workday had a nice move yesterday. I actually shorted this yesterday at the open. It came all the way down. It turned on the 620 chart. Notice how you undercut the prior lows here. This is yesterday after. So this is after the open. It just runs to the downside from like 87 straight down to a low of 82.51. And then you come back down and you retest the low. So at that point, if you're shorted, you could think about covering. And then even once you get a move back to the upside, you might try going long. That's always a possibility too. And I actually did that, and it had a decent move. And now today it's kind of flopping around. And maybe it's going to set up to go higher, maybe not. I don't know. Like I said, I'm not. That's what this thing looks like on a weekly chart, and this could fail. So I'm watching all of these names. I'm actually just shorted some of this yesterday. It had a big move up in sympathy to workday, and immediately at the open, it just kind of opened up and then got slammed right. Where is it? Whatever it did, it opened up here and then it rolled back over. So that was definitely a spot to hit it short, and it's sort of this is what it looks like here. It's a very V-shaped move. Notice you have a lot of resistance up around the highs. It could possibly get up there from here, so we'll see what happens. But I'll test some of these out, and I'll have one or two maybe in my portfolio, and they'll a lot of times they actually work. I was working on Smith Wesson, whoops, a while ago, and that every time it went above 30, one of these days I'll get this one. Here we go. And see, every time it rallies to 30, you short it, and it comes down. And then it comes down here to the 28 level, and it rallies. So they have earnings on September 1st. So this could very well end up breaking down after earnings. So you notice it maybe looks like a little bit like a fractal head and shoulders. But you can see this thing, whenever you get a rally up into the 30 level, it's shortable, and it comes pummeling right to the downside. So any other brilliant questions? Nothing so far. Okay. Let's keep going through some of these. Now here's the Cinderella Principle. This thing, okay, I think we started talking about this thing down here when it was around 10 bucks. Go back to the webinars in May and see if that's correct. But there were a number of buy points along the way. And the thing actually, from the time we were first talking about it to just a couple of weeks ago, it tripled. A threefold move, ran from around 10 to over 40. So is that going to happen right away? No. And look at how it breaks down. This is your first clue that you had some problems on this thing, is when you had a huge volume reversal off the peak, and it's parabolic. If you're getting excited about this and not thinking about selling as it goes parabolic, I think you're kind of silly. And you could have even sold here. A lot of times these things will go higher, but if you capture the big part of the move, then you're gonna make decent money. And in this market, a bird in hand is almost always worth two in the bush. Ask any of the poor saps who were trying to buy Twilio recently and just sitting there. And the other thing is, if you're going to buy pullbacks, you damn well better be ready to run for cover if things don't hold. Okay, like the other day I went long Line Corporation and at the 10-day, and that was like 45 pretty much. And I'm watching, and then towards the end of the day, we start to run out of gas. The volume picks up to the downside. You can see that. If you're watching a trade, you can see that happen, okay? And as soon as I see that, I'm just gone, because it's not entitled to go back and forth. Notice how there are no real tight closes in here. It's a little bit loose relative to say in here. And when it comes down, I'm just gone. And now yesterday I was able to, have my cash in my pocket, and I'm ready to step in and pick it off at the extreme lows. So, Cinderella's not going to come right away. You're better off just, if you missed the move or you sold into it and it went a little bit further than you thought it was, but you still made a nice profit, then you have nothing really to worry about. And you lay back and wait for it to set up. Just wait for it to set up. And it's amazing to me. I'll get a lot of tweets. I'll get a lot of emails from people. Can I buy this here? Can I buy Acacia here at 116? It's at the 6-day moving average. What? Okay, now you're really getting desperate. To someone asking where was the next place to buy, well, if you want to try and buy it at the $100 level, that would be your next reference point if it doesn't hold the 10-day, which I wouldn't expect it to. It probably, my guess is you're eventually going to see it test the 20-day. So I wouldn't get too excited. The 20-day will rise. If you bought at the 100 level, you get a nice trade today. You're up over 6%, so that's not bad. In this market, I would take that. That's just me. But I think you just have to be patient and wait for your setup. So 5 below, I don't know. I'm not playing with this. No more than I'm playing with this one. Pieces of garbage. How about these? I know everybody was asking about these. But, you know, these aren't... This is what I would focus on, okay? If you want to make money in the market, focus on dynamic stocks. Look for dynamic stocks, okay? You know, I'm sorry, I know we put this one on as a pocket pivot, but to me this is a piece of crap. It has no dynamism. It's just a stock that kind of trundles along and has it has some pocket pivots, but it never goes anywhere. So there's nothing dynamic. Everybody owns this one. It's a staple in most portfolios, most mutual fund portfolios. Look at the market now starting to get into a little bit of trouble. So I'm selling the Twilio I just bought. It's like exit stage right, goodbye. Not really. So my advice would be, and this is what I see, look at this. You get the bounce, now it's kind of reversing on heavier volume. We'll see what happens here. But I don't know, this doesn't look quite, this looks like it could retest this low. So watch for that and watch how the market pans out. Right now the Dow's up 64, so it's at its lowest level since the initial post-Yellen sell-off. And I think, you know, one of the stocks I love to day trade is Facebook. You can make a living day trading this thing. It's a channeling stock. You short it whenever it comes up to 125, 126, and you cover it whenever it goes down to 123, around 123 or lower, say. What's the lowest you've been? 123.09. Yeah, so, you know, you get a couple of bucks back and forth. That's all it's doing. It's probably not going to go anywhere for a while. It's probably over-owned, and it's going to need some time to work out the weak hands. So I think if the market does go higher, then Facebook is likely to go higher, but by the same token, if the market does go lower and rolls over or fails, whatever, it's going to break, and it may test the 50-day line. So place your bets. Let's see. Let's look at some other stuff. I think you need to keep an eye on the big stock NASDAQ names. The NDX, these were leading the market, but you know now the NDX, as I showed over here, has been flattening out, and so that's reflected in the action of these names. You got Apple, you got Google, same thing, flattening out. Amazon, flattening out. Microsoft, acting a little better, but basically flattening out. Priceline, now we're up 59. See, we're starting to give way. So I'd look at the short saying now. That looks like a possibility. Priceline's just going sideways, going nowhere. Intel, another big stock, NASDAQ again, going nowhere. But you can't say that looks, you know, any of these patterns look bad. They look okay. But what I would be watching for as a clue here would be a breakdown in these patterns. If you start seeing them fall out of bed, then it may tell you that we've got some issues. And I think you're in an area where correction is possible. You know, we've gone up a long way. So I'm always telling myself, you know, okay, we could have a correction. Where would it carry to? What would be my game plan for the stocks that I like? Where would I be buying them? If I wanted to hold positions, I'm not the type of person who's going to try and sit there and position build. If you are, then my suggestion is you better figure out where your out point. But in this market, you better be careful about getting stuck in something that blows up, okay? Because it's not 1999, and I know some people want to think it is because they see stocks like Twilio and Acacia going nuts, but it's not. I mean, in 1999, you had moves like that, but everything was moving like that, not just a small handful of stocks. So it's not anything like 1999. It's still the same swing trading market where you have to look at taking profits, and you're not going to catch the entire move. You know, I didn't. I think I was selling this thing when I bought. I was selling it right into 60, and it just kept going. And but you know, net now, it's almost 20% lower, so I'm much happier. Just Dow's up 24. We're going to reverse here, people. We could go down further, so I would be watching out. I like some of these shorts. So what else can I short? I think Facebook's probably a short. I already shorted that at 125. So when you guys weren't looking, and it's coming down hard. Now they're reversing everything. There we go. Fortunately, I was already short most of these names. Anyways, any more brilliant questions? So we got about 20 minutes left. Let's go through some more of these names. I want to look at couple of things here. See, I think CRM, Salesforce, right at the 50-day, look at that. Okay, you see it on the daily chart here. Hovering on a 620 sell signal. Let's short a small position here and see what happens. Now, what will I use for my stop? Well, if it doesn't really work, a lot of times you can kind of feel things you're pushing on a string. You know, I don't know, if you're a long-time trader, you can get that sense of things. And I can often, having a position in something, I can often get a sense of whether there's a bid underneath it. So, but this one right in here, you know, you might look at 80-20 as a short-term stop, but if you're going to give it some more room, then obviously the highs of the day. But notice how it is reversing. What's the volume rate on this one right now, Dr. K? What are you showing?
CRM, we've got 11% above.
Okay. Here comes Twilio back down to 51.24 bid. So it's running higher then, correct? Running above average?
Yeah.
Yeah.
And the market nervousness is from that Fed's eternal hawk talking about, well, he's doing his same of his song and dance. You know, it's the Fed's Fisher.
Yeah, so
that,
it's the same confused Fed. So the bottom line to me is forget about the Fed and forget about negative interest rates or whatever if they go there or what, or higher rates or what. It's all going to boil down to where the economy goes. I still think the economy is flat on its back. And if Hillary Clinton is in, hopefully if we have Hillary Clinton in with the Republican Congress, then the government will sort of be neutered. If you get Trump in there, I think a lot of people in Congress will probably oppose a good deal of his policy. So I don't really see a lot of danger there as long as you have some balance. What I don't like is when you have all the one party controlling everything, the White House and Congress and the Senate and the House, you know. Then I think you have trouble. I mean, if you think about it, one of the best decades was the 1990s, and the government actually balanced the budget on a cash basis, but only because you had the Republicans take over Congress for the first time in 40 years or something like that in 1994. I actually remember old brokers who were lifelong Republicans dancing on their desks at Merrill Lynch when that happened. And but they dragged Clinton more to the middle, you know, to the center, because he started out somewhat left, trying to raise taxes and Hillary care and all that. And it worked out pretty well. So when you get to the government's able to work together, I think that can be productive, and it's hard to say whether either candidate would work out well one way or the other. So I'm not voting for either one. So somebody's asking about Acacia, but we already talked about it. So you must be a late arrival. I'll just quickly review it. The $100 level is a Jesse Livermore's century mark rule. You know, if you buy at the 100 level, he would say it's an old rule of mine, you know, that when something went through 100, 200, 300 for the first time, it would generally be up, you know, 10, 20 points in a jiffy. So he would buy it and he would trade it, and that's what you could have done. You got 20 points out of that turkey, more than that actually. What's the high? 124.90. And that's probably the trade. Now it's pulling into the 100 level. You would look for support near term at the 100 level, but the problem here is that you're kind of up there, and you got to remember this thing went up. What was the total move from 67.70 up to 124.90? Isn't that like 80 something %, Dr. K? Where's your little
exactly.
calculator hat there? Put that on. So, you know, what do you want? And now you want to buy it. So you know, hopefully you own it maybe, and you're wondering what to do with it. I would say the 20-day line would be your maximum downside selling guide, but I would take it a little further than that and sell into the move. I sold this one into the move. It went another, you know, 10, 12 points higher. So what? I don't care. If I catch a big move, that's all I want. I want most of it. A lot of people will sit around forever with something and then watch all their gains disappear, because they've been brainwashed by the goofballs over at IBD into thinking that you're going to hold a winning stock forever. It doesn't work that way anymore, unfortunately. And it is unfortunate because it's harder to make money. But if you're nimble and you know how to trade and swing trade these markets, I think you can make money. I've done it for the last 4 years. And I'm having a decent year right now, but I'm not going to say anything because I can jinx myself. Let's see. Any other questions? Let's look at, we looked at YRD as a Cinderella. So I think this one's, like I said earlier, this huge selling here, you get some support, but they're selling into it, okay? Somebody's trying to buy it, yes. And they're a latecomer, so it's pulling into the 50-day. It probably needs some time to build a base. I wouldn't get excited. You'll notice the CRM is moving up another dime from where I shorted it, so I'm not making any money there, but I am making some money on other things, which is fine. Twilio's coming in. It's trying to hang in there. Let's take a look at that in real time. But, these are the few stocks that I'm very interested in. Okay, Twilio, Line, Acacia, this Tailend. I even think this one, which I'll get to. Now, let's see, it's trying to turn now. I don't know. This is tricky. I think if you bought it, you'd have to use a 20-day line as your stop, but it's trying to hold it. What's another one I'm thinking of here? TLND, we talked about that. You could have bought this morning if you're really resourceful, and you would be making about 10%. And then you have this Impinge. No, what is it? PI, IP. I don't get it. The I comes before the P in the name, but yet the symbol, the P comes before the I. Okay, go figure. This is really thin. It trades just a couple 100,000 shares a day, but it's coming right on top of the base here. So you might keep an eye on that. But for the most part, this is the sort of stuff I'm focused on, the few hot names, and just trading them and watching how they're moving around. So I'm not getting too excited one way or the other. Nvidia was a viable gap up, but again, this one's kind of tired. It's had a long run. We've been on this one since way back down here on this Bible gap up, and it's had a nice move, so I don't think you can expect it to tear out of here right away. So Twilio holding that 20 period line. See that? That's actually constructive. That's what you'd want to see. It may hang in there for a little bit, but market's starting to deteriorate a little bit more. This is kind of tricky. I don't know. I think you have to kind of lay back, because the bottom line is, if the market comes in, it could come down and test the top of the base at 44. Now, if that happened, it's like squeezing orange juice at that point. You got to come in and catch it. That's juicy. JNUG, isn't JNUG a gold?
That's the 3x gold miners,
Yeah.
junior gold miners.
Why do we need to?
And one of the most volatile ETFs.
If you're bullish on the
What's
metals,
that?
if you're bullish on the metals, then I guess you buy it. But I don't know why we need to talk about it. So it's just a leverage gold ETF. Barracuda is just holding really tight, but it's going nowhere. I wouldn't be surprised if this thing just dropped out. I don't know. Palo Alto Networks comes out with earnings, I believe, early next week, middle of next week, something like that. That one's been trying to move higher, and it's actually acting pretty well. But I would watch. Some of these could come apart if the market gets into trouble. So, CyberArk has been trying to go higher in the group after getting whacked, and it's sort of recovered. It got whacked on earnings, but it's sort of up there, and a lot of these patterns look a little bit pod-like, so I think you have to be careful here. You got that one, but you also have, Fortinet has basically broken apart. It's trying to come back up, so neither here nor there. FireEye, which there's rumors it's going to be bought out, but apparently nobody really wants to buy them. That looks like garbage. There's this other one, Imperva. The perv, as I call it. It's hanging along the 10-day, or the 20-day rather. But look at the weekly chart. See this? To me, this looks like it could be shortable. Like the Dow's about to turn red. Everybody, isn't that pretty? I'm actually mostly short. I am short. I don't have any longs. Everything's gone. Yeah. Anyways, right now we'll see how things pan out. But you can see this almost looks like it's in a short position to me. It trades 795,000 shares a day. Yeah, I'd like to see 1 million, but it's probably going to break. Anyways, none of these look that good to me. I wouldn't really go after them. Baba. That's just hanging tight. But again, Cinderella came. You could have bought the Bible gap if you got a great move. Personally, in my book, that's something you sell into if you bought this Bible gap up. We were talking about it in the webinars long ago. Remember how I had an undercut and rally back here in June when it undercut the May low after the Brexit sell-off. Bombs away. Look at this. Market's done now, everybody. Okay, here we go.
Yeah, more of these, the Fed's Mester and other these governors have said that it makes sense to start moving interest rates higher. So these are the hawks that exist on the Fed board. So they're
Yeah.
saying what they've said in the past,
So
and it
there's
of course creates
but
volatility in the markets. And this is pretty much standard. This has been happening again and again, like a broken record.
what I would say
Um,
though, Dr. K, is that what I'm talking about, what I've been talking about is watch how these big stocks act, because
oh yeah, they're your key. They're the
everything
key
starts
right there.
breaking down. You got some problems. And the other thing to think about is that the movements in, and if you think about it, Baba came public uh, 2 years ago, less than 2 years ago. You got Twilio, Acacia, you got Tayland, you got Line. These things all had huge moves, and they were probably the only things where you could make any decent money over the past couple of weeks, right? And so to me, this could also be a near-term speculative blow-off that marks a market top. And I think you have to be open to that potentiality. And that's the one reason why I sell into big moves up and then I lay back, because I think we're in a very unstable period in market history in terms of all of the bubbles that have been created with this endless QE. So I do think you're in an unstable market. Someone asked me the other day in an email, aren't you afraid of holding things overnight? And I have to say, yeah, because of the potential of some weird news, some collapse, some black swan somewhere, some bubble popping, a terrorist attack. Germany's been on high alert for a catastrophic terrorist attack and all this stuff. And yeah, I'm afraid of holding too much overnight. So I will never, like in the past, I would be 150% long or 200% long. I'd hold things overnight. Now I won't do that. Will you, Dr. K? Will you hold a highly leveraged portfolio overnight?
I will not do it in stock. Well, in stocks, if I have cushion, then I don't have a problem with it. But that the cushion has to be there. I think
Right.
there's too many gap down risks. I will hold the right type of ETFs because obviously markets don't gap down 50%, but stocks can, especially the high flying ones, especially the ones, if you don't have a cushion in a stock, if I'm sitting on a 20% profit in a stock, that's usually, I'm pretty comfortable, and it's still in an uptrend. I'm gonna sit on the position.
Right.
Um, and again, it's a matter of position sizing. So I don't have a problem sitting overnight with a brand new stock, and it's 20% of my portfolio, whatever, and I could do that a few more times, especially in this uptrend we've been having. But it's all interlocking. It's like an engine. You're adding a few more cylinders to the engine. As long as the cylinders are working fine, then there's no problem, and you've got cushion, and you know that what's your downside? Well, let's say there's a nuclear attack or something, or China has another of its surprises. That's happened twice in recent history. That caused the August drop, and it also caused the January drop, where China said basically they shocked the markets talking about how weak their economy is. That could happen again. It might happen out of Germany. We have a lot of tsunamis coming our way, and we wrote at the beginning of the year, expect a lot more volatility this year than in years past, because some of these bubbles will start to burst, and some of these countries are going to have nasty surprises, both politically and economically.
Here's one that was a short a couple of days ago, right into it looks like a bottom fishing Bible gap up, but that's kind of what that looks like. So there's some things I would look at as potentially shortable. Twilio coming back down to 51. Square was one. I mean, if you guys remember, I was talking about this down here around 9. Remember? It was my bottom fishing pick for those who like to bottom fish. But look at how this thing is slowly. You had a pocket pivot, slowly moved higher. You had a gap up here, and then that's a little extended. So the test here looks normal. You buy it along the 10-day, and it turns back to the upside. You get another gap up on a upgrade. But at that point, it's this thing doesn't seem to get any momentum going, and in this market, it's not going to. So I try to buy on the pullbacks and then sell into the upside move. So I had some of this on this gap up day, fortunately, and I sold into that. And that's how I'll handle it, and I understand it's not, as some people say, it's not Ken Slim, and I say, yeah, it's also not losing money or watching profits that you make go to nothing like Ken Slim people do, so automatons. So I wouldn't use cancel in this market. I think only a fool would. So, and if you use it and you get a nice gain in the stock, then you damn well better think about where you're taking your profits. So, and then you can re-enter because we have lots of tools for re-entering stocks. You know, if you look at Weibo, WB, this stock has been a nice player since we put it on down here, way back here. It had a nice move, you know, about 20% or so. You could have sold into that. And then you could be buying back right in here as it gets tight along the 20-day. You got a voodoo day. You're showing some pocket pivot action in here, some 5-day pocket pivots, 1, 2 here. So, you know, it moves higher, runs up another 20%. You could sell into that, and then you're buying it back in here along the 20-day. It undercuts the slow here. This is the Brexit sell-off, and the undercut and rally works, and it goes higher. And now it's really up there, and it's going higher again today, even in the face of a little market wobbliness. So, you know, there, and so you could have sold into this, and maybe it'll go a little higher. My guess is you're going to see it pull in and base at some point here. But you can work stocks as they, you know, build bases and move higher. This seems to be getting a little climactic though, and especially if you have the tools to get back in, which we have. So I think our methods facilitate this idea of swing trading, and they can be easily applied to it. And you throw in a few other things like the undercut and rally, which is a Wyckofian spring, or the Wyckofian retest. See, Twilio is not holding, people. Let's look at this. You see what I told you? You've got the tradable low, okay? So you can pull this on the MACD stretch and pull the trigger on the MACD stretch, and then it rallies above the 20 period, but now it's failing back through it. So now you're looking at a possible retest. Does it hold above and volume dries up, or does it undercut as volume drying up, or does it go all the way down to the top of the prior base at 44? Those are what you're watching for. And if you step in and try to take a position in the midst of the pullback, then you should probably keep a tight leash on it, because you don't want to get trapped in a move down to 44, I don't think, unless you can really afford to sit through a 10% drop or more. Anyways, Dr. K, holding ETFs overnight. Are you speaking of MDM ETFs or others such as sectors or indexes? Or indices?
I'm talking about ETFs in general represent a basket of stocks or a basket of indices or whatnot. They tend to be less prone to gapping down, you know, by a huge amount. Stocks obviously can gap down 90% overnight if they want to. I mean, especially the biotechs. But ETFs in general, you know, don't have that characteristic. If you're dealing with a 3x ETF, on the other hand, you know, be aware, like something like JNUG. Be aware of how it trades. You know, be aware of all the ETFs that you might buy, how they trade. JNUG obviously is massively volatile. I think it is the most volatile ETF. So, you know, if it's within my risk, if it's within your risk parameters to hold this overnight, knowing, look, you know, it's gapped down before easily 10%, 15%. Then fine, you know, position size accordingly. You know, I'm not afraid to buy into a JNUG at a certain level and a certain percentage of my portfolio, because I know what the risks are. You know, that it comes down to that, knowing your risk reward in anything you buy, and that includes stocks. I mean, there's something like BSX is a really slow moving stock. Now, we do have some members who prefer like the real tight, boring, slow patterns. It's not something Gil and I would ever buy. It's just too damn slow. But, you know, we are trying to find stocks, not just the highest flying ones, you know, that have the big, you know, relative strength 99 in their price patterns. There's all kinds of investors, you know, even in this market, there are still the ones who want to buy on strength. Well, you know, we do have that tool, that solution of, well, if you're going to buy on strength, at least buy on a pullback, kind of where, you know, if maybe the volume dries up and then you get a sign of strength. That's a good position, because your exit point is probably only a couple percent, you know, maybe 2 or 3% away from where you're actually buying it. So, you know, always keep your risk, as Ed Seykota has always said, that's the most important rule in investing, your risk control. Those are the 3 most important rules in investing, actually, he would say. So, yeah, at any rate. Yeah, and the market continues to fall here. Yeah, this volatility on the speech day is the dissenting Fed governors and whatnot.
But you know what? Forget about the Fed. Forget about all of that. Just watch what's happening. And what we know that has happened in the market is that you've seen these big moves and these hot IPOs could be a speculative bubble, okay? Other people want to believe that it means Cinderella's coming back to the ball quickly and they're going to make big money once again, but I doubt if that happens. That's one thing that I think is a potential problem for the market, is essentially that we may have just had a small, sort of a mini speculative bubble in these names, and it's indicative of general market top. So again, watch these names as they start to come apart, and that could.
Well, the bottom line is, you know, people, we love to talk about economies and politics and whatnot, and that does explain some of the market moves, you know, like the Chinese move, you know, the Chinese moving the market in August and January, but nevertheless, you could fly blind without the news completely. You don't
Right.
have to have the news at all, and just have your stocks. That's what I've generally made a practice of doing. I mean, we write these reports, so obviously we put flavor into the reports by talking about these other issues, topical issues of the day. But when it comes to really making money, I mean, geez, you know, since I was working at O'Neill, I didn't have access to news. I didn't need it. I didn't care about it.
No, none of
And
us
if
did.
I had access, remember they offered to bring a TV into my office, and so I could have. I didn't want it. I said, no, I don't need a TV. I really don't want to be distracted. And I would add that if I had a TV, if I had the news back then, it probably would have adversely affected my performance.
Yeah, it very well can, and you don't really need to watch. I don't even think you need to watch the indexes per se, because a lot of times if you're just operating on the basis of what you're seeing in the stocks and using a 620 chart for your entries or whatever, these voodoo pullbacks, you know, you're long this thing in here and you're out of it into the move, and now you're sitting here wondering, you know, I actually bought this on Friday when I was on vacation last week in the morning, sitting at the place we were staying at had. This is in Bishop, California. They had brunch, you know, free brunch in the morning. So I'm sitting there with my laptop watching the market open up at 6:30, and I see Twilio alert goes off. It's right within 1% of the 10-day moving average, so it's coming in that morning. I just bought some, and the thing ran up, you know, bounce up. Now it's rolling over, but I'll sell into that move too, because I know that just one bounce off the 10-day line, like I said, it's not 1999. One bounce off the 10-day line gives you a 10% move to the upside. Actually, in this case, it was actually about 18%, as I recall. And, you know, that's what you take. So, anyways, I think that's all we've got, you guys. So, you know, hopefully some insight into what to watch out for. But I definitely think you want to play it close to the vest. Watch these things as they pull in, because we might be in the midst of a correction that eventually runs its course, and you're actually able to buy some of these names at more opportune spots. I guess if we see anything, we'll try to put out alerts. But a lot of times I'm just too busy trading my own account. So we'll try though. So anyways, maybe
Well, yeah, I mean, you and I we talk about names throughout the day anyway, and so if either one of us is able, we can just throw up a report, or sometimes just, you know, sometimes the reports I put up, they take me 30 seconds, you know, just
yeah,
to let everyone
I'll
know
keep an eye
here's
on
the
things.
stock.
But right now, I think, you know, you reverse on the Nasdaq. Volume is up on the day, isn't it?
I would imagine, definitely.
Yeah,
I
it's
mean,
up
without even looking.
27, almost 28% on the NYSE, and up not quite 10 on the Nasdaq. It's a little bit of a crazy morning, so it could get crazier. Anyways, that's all we've got, you guys. You know, you know what I'm thinking here, and I'm thinking that there could be some issues here, and you know, if you're playing these hot names, you've made your money. I've made my money. I take it, I back off. Now maybe I go to the short side. I am actually on the short side, and right now I'm about 100% short, maybe 99% short, but and making money very quickly here. So, but we'll see what happens. A lot of times this just turns out to be a quick intraday trade or swing trade, but I want to be in position if this thing starts to come apart. So anyways, that's all we've got, you guys. Thanks for showing up. Have a great weekend, and we'll catch you next week. Take care.
So long, everyone.